Hello traders, Gary Wagner here. It is 12:50 in Honolulu, 6:50 in New York on Wednesday, 24th day of April, 2024, and this is the evening report for gold and silver. Gold prices have declined for the last 3 consecutive days, although today and yesterday were moderate with modest price declines. Gold is currently trading in Australia. It is up 70 cents from the close in New York. In New York, gold gave up $6.80, and that took a troy ounce of gold to $2,328.90. Gold is currently fixed at $23.2960. Silver futures also had a modest decline today of roughly 15.5 cents in New York. It is trading overseas in Australia and is currently fixed at $27.21.5. The dollar did increase slightly, up 0.12%, adding to the pressure and magnifying the level in which gold moved lower and silver moved lower, which was modest in the case of both precious metals. Although gold has declined for the last 3 consecutive days, the vast majority of damage was done on Monday with a decline of over $60. We have had single-digit declines for the last couple of days, and we have moved into a territory which, if gold continues to move, I would look for potential support, the first level to look for at least, to be at $2,285, the 38.2% Fibonacci retracement. I have added a second Fibonacci retracement with a much longer data set. This data set begins in October of last year when gold was trading at about $1,880 up to the record high. When we do that, the 23.6% Fib retracement comes in at 23.15, with the 38.2 coming in at 22.32. By putting both Fibonacci retracement data sets onto one screen, we can look for something called confluence or agreement. We are looking for price points that occur in both the longer data set and shorter data set. And once we put these two different data sets side by side, we can see that some are relatively close, such as the 61.8%, 78.6%, but I draw your attention to the 38.2% that corresponds to the 50%, both coming in at approximately $2,235. Because you're getting this confluence, should we see a deeper correction, we would look at 2230 as a very plausible point for gold to find support if it does trade under pressure. The last study that I want to do for gold on today's show is to look at strength of the current downtrend. One of the best tools we can use is simply called a Japanese average or Heikin-Ashi chart. You can see that during a strong uptrend, it can be defined by very large candle sizes, the absence of lower wicks, and as that diminishes or you get a pivot, that tells you there's a potential change in the direction. Such as this last leg, the candle size started out very large and began to diminish up until about the 10th of April when we saw a series of lower wicks occur. Lower wicks are important, as I've said on numerous occasions, because they signify that at some point during the trading session, market participants were able to take gold prices below the midpoint of the prior day. When we look at this current 3-day decline, the largest of these candles occurred yesterday. This last one is referring to the open and small amount of trading done in Australia. There are no upper wicks, which is what we look for in a correction, but body size today is in no way as large as what we saw the previous day. We will have to see if this trend builds up in terms of momentum or is going to be a more shallow correction. But as I said, $2,235 seems to be a logical point if we get a medium correction in gold. And that will be largely determined by what the inflation index report released on Friday shows us, which is the PCE. In terms of our outlook on silver, I'm using an exceedingly long data set for our Fib retracement. It begins in February of 21, when we saw silver hit the heights of $32.50, down to these lows in September of 2022 at $19. Gold over the last 2 weeks, this is a 2-week candlestick chart, broke below the 38.2% Fib retracement at $27.38.5. Silver is currently fixed at $27.19. I have converted the 2-week candlestick chart to a daily to show that the last couple of days in silver are nowhere near as deep in terms of price change as what we witnessed on Monday. More so, I want to convert this into a Henkinashi because that will allow us to see strength of trend. It does appear to be a little bit stronger than gold, but nonetheless, we only had one very large body size, and that occurred yesterday in silver. The fact that we're solidly broken below 27.38, I would have to look at $85 to $26. It is based on the 50% retracement, but it's a long-term retracement. More importantly, it is based on this top that came in March. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.